Shares of Hims and Hers are down 21% on Thursday as I'm recording. And that's after Amazon announced that it's getting into the telemedicine business. This is something that investors have at least been concerned about for quite a while now, that a big player like Amazon was going to try to go after Hims and Hers business. Now, what I think is interesting here is what Amazon is bringing to the market is not necessarily a direct competitor to Hims and Hers. In some ways it is, but in other ways it isn't. And what I think investors need to think about today is, how do these two business models play against each other? Hims and Hers is a specialized horizontal services company. So that means what they do is healthcare. The only areas that they're vertical integrating is buying into pharmacies that can compound and produce products that are going to make custom solutions. Amazon is a vertically integrated company in all kinds of different ways. It has its website, it has warehouses, it has shipping, it has airplanes. It has all kinds of stuff, and now lumping healthcare services into Prime is just another thing that's adding to Prime. That could be an advantage, but the way that I think we need to think about this is Hims and Hers is a specialized company, and they're going to be able to offer better and more specialized solutions to their customers than Amazon ever will. This is the reason that Amazon and all kinds of other companies like Walmart have failed in healthcare. They're not specialized. It's not what they do. And so I think Hims and Hers is going to fend this off, but it's worth looking at what's being offered and why the market is reacting like this today. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at the stock's reaction first. You can see the shares are down about 21.6% as I'm recording right now. What is interesting here is shares are only down to a little bit more than where they were trading on Tuesday. So this is a big move for today, but it's really just undoing the move from a couple of days ago. Here was the announcement from Amazon today, introducing low upfront pricing for telehealth visits with treatment plans and fast medication delivery for men's hair loss, eyelash growth, anti-aging, ED, and motion sickness. So hair loss and ED are really the two things for Hims and Hers. That's two main products for them. So if Amazon is getting into this business, obviously something that investors need to be concerned about. So what they're introducing today, they've had some pharmaceutical offerings for quite a while now, but they are doing a pay-per-visit telehealth service where they can treat 30 plus common conditions, and it's going to be as little as $29 for a video visit or $49 for an FSA or HSA visit. This is the pay-per-visit page, and you can see that what they're really doing here is getting into a whole bunch of different potential treatments. So it's not just what Hims and Hers is doing. It's birth control, it's COVID-19, pink eye, UTI, cold and flu, and strep throat. All kinds of different things that Amazon is trying to get into by getting into this, not just specific treatments that Hims and Hers is in. So a little bit of a different service. And again, I think the way that you need to think about this is Amazon is adding services to Prime. These are going to be an add-on price, but you're going to have to be a Prime member to get access to most of this. And these are going to be pretty standard solutions. If you go to the ED page, for example, the treatments that they're going to have are kind of your standard ED treatments. They're not going to be doing a lot of personalizations the way that Hims and Hers is. Hims and Hers is going to be a little bit different. It's going to be a little bit more, hey, let's get to know you a little bit before we try to figure out what we're treating. They also do have far more personalizations. About half of their revenue is now coming from personalizations, or half of their subscriptions, I should say, are personalized subscriptions. So they've talked about this a lot being a competitive advantage. You have injections, you have pills, there are mints, they're going to have gummies, there's creams. There's all kinds of different specializations and personalizations that Hims and Hers is able to do because they are a focused company. I think this really is the biggest thing between these two. Amazon is adding this to Prime. Amazon is becoming the company that can do absolutely everything, including healthcare. But does that mean that they're going to do healthcare well? And it's going to be the best solution for most of their subscribers? Probably not, because historically, that's not the way that this works. You're going to want to have a company that is specialized, even in music. You can get music through Amazon, but more people choose Spotify. You can get video through Amazon, but more people choose Netflix. Specialization is typically the way to go in these businesses unless it's directly adjacent to your core business. And that's definitely not the case for Amazon getting into telehealth and prescriptions. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So if you're bullish on Hims and Hers, what should you be looking for and watching when you're looking at competitors like this come to the market? One thing is obviously revenue growth. Now, management guided for 90% revenue growth in the fourth quarter. I think there's a lot of growth runway, even if Amazon does have a lot of success in getting into prescriptions and telehealth and all the things that they're trying to build out. But this may more limit the upside for Hims and Hers. May not be 90% growth. It may be 50% or 40% growth in the future. So that's one thing that investors are thinking about when the stock is pulling back is, did that upside just get a little bit smaller? The other thing is margins. And that's why here I want to show what the margin profile looks like. This is the trailing 12-month revenue. That's the grayish column. And then you have gross profit. That gross profit is going to be about 80+% of revenue. So very, very high profit. They're able to mark up their products 4-5x. And that's not uncommon in healthcare. But if Amazon comes in and says, hey, we can do all these things for half the price, that's going to eat away at that. The reason the operating income is so low in this chart is because Hims and Hers spends a lot of money on customer acquisition. So that's their sales and marketing. They're going to be doing a lot of direct advertisements. You may see those if you're on Instagram or just randomly on the web. There's going to be a lot of advertising for Hims and Hers because the company is trying to attract customers by reaching them directly. Now, the question for investors is, what is that value once you get a customer in the ecosystem? I think Hims and Hers has proven out that they're not on a customer acquisition treadmill, as I've called it, where you're spending $100 to acquire a customer. They maybe spend $100, $200 with you, but then you lose them pretty quickly. That value is being generated long-term from acquiring those customers. And as you scale the business, as you're able to do more things like brand advertising, which is a little more broad-based, that marketing spend as a percentage of revenue should start to come down. So that's the operating leverage that we should see in Hims and Hers business. But if those things don't materialize, the growth rate slows, we have gross margins fall, that's when you're going to see competitive pressures on the income statement for Hims and Hers. So those are the things to watch for. Like I said, I think the business model differences between the two are really what's going to separate Hims and Hers long term in this space. At this point of development in the internet, I want a company that's building its business to be specialized in healthcare, to offer specialized solutions, personalized solutions. That's exactly what Hims and Hers is doing. It's not just a telemedicine visit because you have a sniffle. That's something that Amazon, sure, they can take that business. That's just fine. But those personalized solutions, those long-term relationships, that's where Hims and Hers wants to be building that value with customers. I think that's going to continue to grow. How much is it going to grow 2, 3, 4, 5 years from now? We will have to see, but I think the growth rate is so strong today, it's worth being bullish on the company. But let me know what your thoughts are in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.